Stock markets around the world have bounced back since the big sell-off earlier this year. In the US, the S&P 500 has recovered all of its losses, whereas in the UK there's some catching up to do. Coronavirus had started to spread outside of China in mid to late January, but the first deaths outside of the country didn't happen until the first week of February. Despite the virus continuing to spread around the world, it wasn't until the 24th of February that global stock markets started to panic. The market close on the 21st of February represented the last day pre-panic for the UK stock market, where the Footsie All-Share Index closed at 4,132. It then started to fall fast and hit a year-to-date low of 2,727 on the 23rd of March, and that's a decline of 34%. Since then, the Footsie All-Share has bounced back by 25%. That's very encouraging, but it's also worth noting that more than 1,000 stocks on the UK market have risen by an even greater amount over this period, meaning it's been a stock picker's paradise. The best performing London listed share since the 23rd of March has been Motif Bio, up 1,530%. Among the mid and large cap companies, William Hill is up 230% since the 23rd of March. Marston's is up 156% and Trainline has increased by 136%. Now you'll also see names like National Express up 115% and Cineworld up 93%. It's very interesting that a pub operator, a cinema chain and a train ticket seller are among the stronger risers during the bounce back. Given that we can't go to our local at the moment for a pint, the flicks are shut and lockdown has put a stop to all rail trips apart from a small number commuting to work. Admittedly, Marston's ascent can be partially explained by it striking a deal to sell part of its brewing business. But for the rest, you need to see how far they fell before the market turned before making a judgment on their recovery. So if we look at the data from the 21st of February market close to the end of 23rd of March, the list of the biggest fallers during the market sell-off is very similar to the list of the biggest risers since the market recovery. So essentially the market's taken the view that many stocks had been oversold during the sell-off. The top 10 worst performers during the market sell-off includes William Hill, Cineworld, Marston's, National Express and Carnival. Now they're all linked to travel and leisure activities. It's definitely worth looking at the figures from a sector basis. So between the 21st of February and the 23rd of March, the worst hit sectors in the FTSE 350 index were oil services and travel and leisure. So a large decline in oil prices this year will have clouded the prospects for oil service companies. The share prices have fallen because investors might fear that work will dry up if the big oil producers are cutting back on their spending. Now, the travel and leisure sector fell by 55% between the 21st of February and the 23rd of March, as airlines were grounded, pubs and cinemas were shut, hotels were operating at low capacity, and gambling firms faced the prospect of months without live sport to attract bets. So if you exclude leisure goods, as that sector only contains two stocks, being Games Workshop and Playtech, it's been the miners which have led the market rebound since the 23rd of March, up by nearly 50%. The industrial metal sector is also up by a similar amount. Now this would suggest that investors are optimistic that the pandemic won't have a long-lasting negative impact on commodities demand, and that the global economy will soon recover.